Good morning, students. In our last class, we have discussed about the basic concept of partnership. As you can see, you know the meaning of partnership, right? That is Section 4 of Indian Partnership Act defines the partnership as a relationship between the person who have agreed to share the profit of a business carried on by all or any of them acting for all. We have discussed about this partnership, how the partnership takes place, why the partnership concept has come forward. We have discussed about sole proprietorship. That is, when a sole proprietor starts a business, that means there is a limitation for the capital introduced by a sole proprietor. In order to avoid the risk of the business, in order to bear all the profit and losses by a single person, the partnership form of organization came forward. Now, we have already discussed about the features of partnership as well. That is, two or more persons. When we call it as a partnership, basically we need two persons, minimum two persons. And when we call it as a maximum, in the banking sector, we need 10 members, and in any other form of partnership, it is 20 members. That is the first feature of partnership. Second one is agreement. It is a mutual agreement between the partner. To make a partnership form, there is an agreement, but it is not necessary that it has to be a written agreement. Even it can be in an oral format. Third point, it speaks about business. That is, the business should be a legal one, not the illegal one. They need to consider some sort of business, then only we can call it as a partnership form of organization. Mutual agency is nothing but, in the statement, in the definition, they say the business can be carried on by all or any of them acting for all. That means it is not necessary that all the partners have to come for the business and they have to do it. We have a rule. We have a different types of partners as well. Nominal partner, secret partner, partner by estoppel, active partner. All these types of partnership, what we have studied in the last year. That is why the statement says it is a mutual agency. Either the partnership form of organization can be carried on by all or any one can do all the activities. And that is one more feature of partnership. And last one, it speaks about sharing of profit. How the profit has to be transferred, how it has to be shared, how the collection of money, how much contribution of capital has to be done by each partner. That will also an important feature of partnership. This is what we have studied in our last concept. The next concept under this will be partnership deed. When we call it as a partnership, as I said in the beginning, it is not necessary that a partnership need to be in a written format. Sometimes it may be in an oral format also. But to avoid the future consequences, the partnership form of organization will have a partnership deed. Now, what do you mean by partnership deed? When the partnership agreement is written and signed by all the partners and is duly stamped according to the Stamp Act, is called as partnership deed. Now, what do you mean by this? It is nothing but all the rules and regulations of the business will be specified under partnership deed. Now, there are contents. What are the things will be there in the partnership deed? Basically, to conduct a business, the mutual agreement between the partners are very important. We call it as an understanding. Okay. Now, what are the things has to be specified in that partnership deed? Because all the partners will sign that particular document. As we said, it is a written agreement. If the partnership is written, that document is considered as a partnership deed. Now, there are certain things which has to be specified in that particular things. It's nothing but basically they will write the name and address of the firm, which is very important. And name and address of the partners. We need to know how many partners are there in that particular business. That is also very necessary for the business. Now, amount of capital to be contributed by each partner. Now, take for example, there are three partners, A, B and C. Now, how much amount has been introduced by partner A? What is the capital introduced by partner B? What is the amount of capital introduced by partner C? That each amount will be specified in the partnership deed. Next point, next content is profit and loss sharing ratio. In my last video, I specified about this profit and loss, and many of them asking how this has to be calculated, how they will share the profit and losses. Now imagine we have done the ratio concept before, if you people can remember. Now to do this, they randomly, they may not saying that A will get 2% in the profit, and B will get 1%, and C will get 1 more percent. That is 2:1:1. There will be an agreement between the partner. There will be an understanding between the partner how the profit will be, and profit and loss will be in the same ratio. They cannot say that in the profit I want 2%, and when it is loss I want 1%. No. Profit and loss sharing ratio will be same. It might be based on their capital, or maybe how they have been agreed upon before signing the partnership deed act. According to that, the profit and loss sharing ratio will be arranged, and that ratio will be specified in the partnership deed content. Okay, next, why this partnership? As we said, to give the also specifies about the rate of interest on capital, loan, if the partner is taking the drawings, etc. That also has to be specified. If the partner is introducing additional business, how much interest has to be paid to that particular person? 6%, 8%, 2%, 3%. How the interest of capital has to be collected, that is also specified in the partnership. Now loan, if suppose any one partner takes loan from the business, or drawings, or utilize drawings, what is the meaning of drawings? Utilizing the business money for the personal use. If that has been done, how much interest has to be specified for that? That is also specified in the partnership deed. The next comes with the salaries, commission, or etc. Or if any other things has to be paid. Now basically salary, commission will not be given to the partners, but if it is specified in the partnership deed, then the firm has to pay that amount to the partners. That is also specified in the partnership deed. The next one, the rights, duties and liabilities of each partner. Now, as we said, there are different types of partners in the partnership. Now, what are the rights? What are the duties? What are the liabilities? What are the conditions? Whether A is an active partner. If he is an active partner, what are his responsibilities? If B is a nominal partner, what are his responsibilities? If C is a minor partner, what are his responsibilities? That is also specified in the partnership deed. The next one speaks about the rules to be followed in case of admission, retirement, death of a partner, and in any other matters. Now, this is also very important for a partnership form of organization. Now, imagine there is, as I said, A, B, C were partners. Now, if they want additional capital or extra capital, whatever capital they have introduced is not sufficient for the business. Now, what they can do, they can take one more partner to the business. Imagine they are taking B as a partner. Now, to admit that partner to the business, there are certain rules and regulations. Now, what are those? In what condition we can admit a new partner to the business? For that, rules has to be followed, and that rules will be specified in the partnership deed. Same in the case of retirement of a partner. Now there are, imagine, 3 more partners, P, Q and S partners were there. Now S wants to retire from the business. Now what are the procedures for the retirement? That means he is leaving that business. He is no more partner of that particular firm. Now what are the procedures has to be followed for that retirement process? Same way, death of a partner. Basically, admission and retirement may be in the beginning of the year or at the end of the year. And death, we cannot say that when this person will die, right? He may die anytime. Okay, now, what are the procedures for when the death happens in the partnership firm? What are the procedures has to be followed? This is also specified in the partnership deed. And there are few more concepts, like if there is any, the partnership is coming to an end, we call it as a dissolution of the firm. Henceforth, there won't be any business. Okay, in that condition, what are the different things that has to be happen for a business? All these things, there are many more. Okay, I have jotted down only few points over here, which is very important because this concept contains 2 marks. They may ask write any 2 contents of partnership deed. That is why I have specified only few so that you can easily recall all these points. Now, this is about the partnership deed, the important things whatever a partnership deed contains about. Now, there are certain provisions relevant for accounting. As I said in the beginning, it is not necessary for a partnership to have an agreement. Now, what happens if there is an absence of partnership deed, if nothing is specified about some of the points? Basically, all the partnership firm will have a partnership deed. They will have an written agreement only, not the oral agreement. Now, what happens? Sometimes there will be a chance of not specifying about some things and the partnership deed. Now, in that absence, how these following items will be treated is very important for us. Now, this 5 things, whatever I have written here, is very important for your practical oriented question that will come for 5 marks. Please keep it in mind. You can study only so much, which is important. Whatever displaying in the screen, you can study only with this. Okay. Now, first things is related to profit sharing ratio. If in the sum or if it is the ratio, basically in the sums they will specify what is the profit sharing ratios of the partners. Now, if in case it is not specified in the problem, then the profit sharing ratio will be equal for all the partners. That is, if there are 2 partners, partner A and partner B, nothing is specified, then we have to consider the profit sharing ratio as 1:1. That is nothing but we call it as an equal sharing ratio. Imagine there are 3 partners, A, B and C, and nothing is specified about profit sharing ratio. We consider it as 1:1:1. That is nothing but profit sharing ratio. This is relevant only when the partnership deed is absent. Nothing is specified related to these aspects. Okay. The second one, it speaks about interest on capital. Now, as I said, the partners will introduce a capital to the business and they need some returns, right? If you are investing money in the banking sector, you will keep money in the bank, SB, FDs you will keep, RDs you will do. For that you will get an interest. Same way, when a partner is introducing capital to the business, they need some returns. Now, if it is not specified in the partnership deed, no interest to be paid for any partner. They will not get any returns for the capital introduced by the partner. Third one, interest on drawings. Sale. You know what is the meaning of drawings, right? The business money will be utilized for personal use. We call it as a drawings. Now, about drawings, if it is not specified in the partnership deed, then no interest to be charged. Whatever money has been taken by the partner, interest will not be provided. Okay. Now, interest on advances. This is nothing but extra money other than, this is not a capital, okay? Other than the capital, if any amount is introduced by the partner to the business, then 6% per annum has to be paid to that particular partner. This is about the partner. Only for the advances, they will pay 6% per annum has to be paid. And the last one, it speaks about remuneration for firm's work. Remuneration means the additional amount will be provided for the service rendered by a person. Now, if any partner is doing firm's work, no remuneration will be paid if it is specified in the partnership deed. Will not provide, if it is specified, then the remuneration will not be provided to the partners. This is about the provision relevant for accounting, that is partnership deed. And this 5 concept is important for your practical oriented question. And In the partnership, there are different types of accounts will be prepared. Okay, we'll go with that. Basically, there are two types of accounts will be prepared. One is fixed capital method. Second one is fluctuating capital method. Two different accounts are maintained. Now, what do you mean by fixed capital method? Under fixed capital method, the amount is fixed until and unless there is an additional capital that can be introduced to the business, or a part of capital is withdrawn by the capital. Only in these two conditions, the capital will be changed. Other than this, the remaining amount will stay fixed in that particular account. That is why we call it as a fixed capital. That means under this fixed capital method, there are two different accounts will be maintained. One is capital account, second one is current account. Now, as I said, fixed capital means only changes happens during the additional capital and in the withdrawals of a amount. That is why two accounts will be maintained here, that is capital and current account. Now, why these two methods under fixed capital? Under capital account, only the capital introduced by the partner. If there is any additional capital introduced by the partner, and if there is any withdrawal, only the transaction related to the capital will be specified under capital account. Whereas under current account, the other items, that is the salary paid, commission, interest on drawings, interest on capital, all these things, items will be specified under current account. That is why under fixed capital, there are two accounts will be maintained. One is capital account, second one is a current account. The second method is the fluctuating capital method. Fluctuating capital method is every time there is a fluctuation. That means there is a changes in the capital account. All the time they have to do a changes, because all the entries will be done under only one account, that is capital account is prepared under fluctuating capital, and all the entries, that is capital introduced, additional capital, withdrawals, interest on capital, interest on drawings, salary, commission, everything will be specified in fluctuating capital, and under this only one account is prepared, that is capital account. Now, what are the difference between this fixed capital and fluctuating capital? This differentiation is important for, again, 2 marks. Now, as I said, the number of accounts under fixed capital account, there are 2 accounts will be maintained, whereas under fluctuating capital, there is only one account is managed. Now, adjustments, second point. Adjustments will be done in, under fixed capital, there are 2 accounts, that is adjustment. Capital account, there is only additional capital and withdrawals will be specified, whereas under current account, all the other information, that is interest on capital, interest on drawings, a salary, commission will be specified. Under fluctuating capital method, all the adjustments will be done in only one account, that is capital account. Fixed balance. Under fixed capital, the capital amount balance remain unchanged. That means fixed unless there is an additional capital and there is a withdrawal of capital. Under fixed capital, the balance of capital accounts will fluctuate from year to year, because as I said, everything will be specified under one particular account. That is why under fluctuating capital, the capital account balance will be changing. The last one is credit balance. Under fixed capital, it always shows a credit balance, whereas under fluctuating capital, it shows a credit balance, but sometimes there is a chances for debit balance as well.